Hello, and welcome to another update video about DOT. DOT seems to go for one more extension to the upside here in this current rally. Both scenarios still possible. We still haven't seen a clear impulse to the upside. That's the problem. However, when we zoom out, you can see that the parameters haven't really changed. The narrative is unchanged. We still look at this as a 1-2 setup here, basically 5 waves up in wave 1 into the March highs. The price topped here around $12. This correction definitely is testing our patience. So this wave 2 correction, and it could be finished, absolutely. Looks a bit unfinished to the downside, so one more low cannot be ruled out. Doesn't mean it has to happen, but it also means that with an unclear downside structure, it's impossible to confirm a low is in place. Yeah, but to account for that, let's say, uncertainty, I always offer you the relevant standard Fibonacci support levels where we expect the price to turn around. Essentially, these boxes are there to look for potential entries. For DOT, I think I've been quite clear that as long as we're holding that $4.60 level, I'd like to see the price eventually get to round about $50. That's the sort of overall bigger picture forecast, because if we look at the long-term chart for DOT, we can see that at the very least in that scenario, we'd be looking at an A, B, C structure on the 4-day chart, where the C wave should get to $54. Basically, that's also the level just before we get to a new all-time high. Could be something more bullish, of course. It could be a third wave rally that's starting. But hey, let's first see if we can get to $54. We don't want to get ahead of ourselves here. Let's first see if we can actually hold support. Let's first see if the $4.60 level is holding. So going back to the short-term chart, here you can see the support area. It's defined between $4.60 and $7.50. Below $4.60, while the support level will break or is breaking, it is not yet an invalidation of the bullish structure here on the chart. No, invalidation point is down there around $3.55. However, below $4.60, invalidation will become far more likely. Okay, let's go back to the 1 hour time frame, and here you can see the white structure that still allows for another low. That we might get one more move higher doesn't change anything here. Why? Because then the $7.90 level is the 100% extension of wave A to the upside, and that's a very common target for wave C. It might just mean that we work here on an ABC flat correction. Yep, the C wave might briefly break above the trend line, we'll see, but above the trend line, the $7.90 level is the next key resistance, because the C wave tends to react to that 100% extension. If we go above it, and if the price just cuts through that $7.90 level, then we have a first hint that the yellow count is playing out and that we've already bottomed. That is sort of our first signal. I don't think we have anything before that that could act as a signal that a more bullish interpretation needs to, or that, well, I mean, I've got the bullish interpretation on the chart, right? It's more like, okay, which one seems to be in control right now? And at the moment, I still think we, at least for risk management purposes, we need to at least consider the risk of one more low, because the wave 4 hasn't done anything that a wave 4 couldn't do anyway. It's still all working and running within the realms of what a wave 4 could do, which is a corrective rally in 3 waves, and the C wave reaching the 100% extension. Bear in mind that already here, I explained to you that this might be the wave 4, but it never reached that 100% extension level. So essentially, it might be that we get there eventually and get there and reach that level, and then the C wave could complete there and we get one more low in wave 5. Definitely a likely option. Would really scare off a lot of people for one more low. But as long as we don't get a sustained break below 460, the overall bullish perspective, still is basically unchanged, yeah. And that's basically what I'm watching for. I'm watching for a reaction at 790. If the price doesn't react there, then we can follow the yellow count more closely. And it already shows you the parameters. So I want to see 5 waves in yellow to $9.37 to be able to get a first confirmation that a low has indeed formed. These 5 waves, they are not predictive, but they tell us that if we see them, if they have formed, then we can add the support area afterwards. Okay, so anybody who didn't want to or isn't buying in this area, which already is seen as a general reversal area for that larger wave 2, well, you could wait for that first 5-wave move up and then you add in the pullback afterwards. It gives you a tighter stop, yeah, because the invalidation point will be the low of the April low, like the 13th of April low. And yeah, the pullback might only be shadow. So you have then it basically a smaller range to play with. Whereas here in this larger wave 2, the range is quite large. I mean, this entire support area. Yeah. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.